Heidi ho, everyone, and welcome aboard. Welcome to a brand new week of Trading Buddies. This, of course, is the Monday edition. We have a little bit of news, and that is around Ainsley. She's okay. She's actually changed her day from Mondays to Thursday. So today will be, of course, Ash and myself, and we'll be joined in around about 45 minutes by George, who, of course, has that fascinating 5-minute strategy that he trades. And a lot of people getting interested in that, which is great. And, of course, George does his own shows on Wednesdays. He'll be telling us when he comes into the room. I noticed another daylight saving change over the weekend with the US and Canada. That, of course, affects my 4-hour candles. And will we ever get to, well, we should be now. Everyone's changed, so it's all good. Happy Monday to you too, Paul P. Nice to have you there as always. All right, let's get on with it, shall we? First up, as always, we look at the pound versus the US dollar and see if that's worthy of our attention this Monday morning. Well, you kind of could say it's rangy. NFP on Friday didn't have that much of a turnaround. Well, it didn't have a turnaround at all. It went back exactly where it was prior to the announcement. I think I'm okay with trading the breakout today. Weekly pivot's a bit of an issue. What's our range like? So, say 85, you'd be looking at 90 pips with spreads. 90 pips is up to there. That's our TP1. That's okay. Down the t'other way, I'd have to go a bit wider to find that one, I think. 90 pips. Have we got 90 pips available? Let's go wider still. Oh, not that wide. All right, so 90 pips from there. I've got to get through that horizontal level, of course, but the bottom of the channel does beckon. Say, no trouble. All right, let's go for it. So, those of you, again, this disclaimer, here for the first time, please do not trade this with meaningful money at all. This is a test only. We're still trying to work out the best way to trade the pound versus the US dollar, breaking out into first session, well, first hour of London, basically. But it can be any time. It is a breakout trade, so no need to cancel. All right, the entry level will be the high of the range, which is yesterday, in this case, Friday's range, and plus what's happened today thus far. So nothing's happened today thus far. So let's talk about Friday's range, which appears to be that high. So that's 135.08, which means our entry would be at 135.13 for the long. 135.13 for the long, and the stop loss on that will be the low of the range, which is the bottom of that bar, minus 3 pips. 134.23.5 becomes 134.20. 1.3420. That's 93 pips, not 88. Anyway, we had plenty of room. So I'll place those orders. This, of course, is a one cancels other trade. But as you can see, I'm going in at very, very small stake on this, not risking any money or anything meaningful at all. So the buy level was 135.13. And the stop loss was 134.20. Okie dokie. So there's the long. Enter here, stop loss here, that's right. Let's do the short, which will be exactly the reverse. It is a sell stop at 134.20. And the stop loss, 135.13, if I recall. Yes, indeed. All right, there we go. So the reverse is there as well. Don't forget, one gets triggered, we cancel the other. The rules of management are 1-to-1. Move your stop loss to entry. You can take something off the table if you wish, but really the profit comes at 2.5-to-1. So that would be, we'll just do one of these. We won't do them both. So the risk is, what did I say, 93 pips? Yep. And we're looking for 93 times 2.5 is 186 plus 46.5 is 233. How's my maths? Somebody can check that, I suppose. 233 from there would be 1.3745. Did I say 33? I think I did. This can help us, of course. About there somewhere. 137.46, let's say. Which is there. Our TP1 is 1-to-1, which is 93 pips. So 93 pips from where? 135.13 would be 136.06. Again, if my maths is correct, 136.06, which is there-ish. Why am I using these ridiculous colors? That looks reasonable to me as a TP1. Again, your choice is, well, there's no choice. This is the system at the moment. You move your stops to entry when you hit that level. If you want to take something off the table, do. If not, the real target is 2.5-to-1. And that is really what we're on about here. There's no profit at TP1. It's just move stops to entry to make yourself safe. And that is all. Now, Ash has joined us. G'day, buddy.
Hello, mate. How are you?
Oh, wrecked. Absolutely wrecked.
Big weekend.
Massive working weekend, yeah. Yep. We've had a, do you know what a polytunnel is?
No.
Okay, it's like an igloo.
All right.
But it's sort of like it's a big frame, 20 meters long, and you've got to cover it with plastic, hence the poly comes in. And that, of course, keeps your plants in good shape, and you've got to put two of those over at the same time, put a pump of air that goes in between it, which creates an insulation blanket of air. Oh, man. How hard is that? I can't walk.
Have you finished?
Oh, yeah, it's done.
Oh, that's something, mate.
We've been waiting 2 years to actually put the skin on it. So, it's done, man. I'm over it completely.
Well done. Well, yeah. I mean, at least it's done, and I suppose from here on in, do you get to harvest the fruits now?
Well, hopefully, we'll put them in there in the next week or so. And the idea, of course, is you create enough humidity and heat to allow the plants to strike, or the cuttings off the plants to strike,
right.
Which means they get roots, and then you can grow them on outside, etc., and then sell them, of course. Yeah,
that's brilliant. That's brilliant.
Yeah,
that sounds like things are picking up.
Yes, a weed greenhouse, Dominic, exactly. It's got nothing to do with bamboo. It's all about weed. They can tell these days. They know what you're doing in those things.
Yeah.
So how was yours?
Yeah, it was nice, mate. Yeah, it was nice. Just had a little jaunt into town, and went to a nice little restaurant for a nice early morning breakfast. Did a bit of swimming and stuff like that. So yeah, quite relaxed, really. Bit of NFL last night as well with a buddy. So yeah, it was a decent weekend. Probably well needed, actually. As the weather gets colder here, days get harder. You know, the clocks have gone back. And the weather's colder, it's a bit darker, and the days get harder. So this is really the time to start pampering in a lot of ways.
Sounds like a plan to me. I'm just in full go hard mode. It's crazy time
That's
of year
good.
here.
Yeah.
No, it's not. Too old, mate. I'm just too old.
Never.
I can't do it anymore.
Yeah.
I can hardly walk. My knees completely collapse, basically. Anyway, yes, this is not about us. It's about trading. So
Yeah.
what's going on?
Well, let's have a look at the charts, mate. I mean, I like that inverted head and shoulders there, but let's have a look at the charts because I think that there's quite a lot that we should. Hi, John. I think there's quite a lot we should try and have a look at today because just to get a general view of what's going on with the market. Starting with the S&P, obviously massive move to the upside with the S&P. Looks fairly scaffolded, if you like. You know, foundations don't look like they're there for it to sustain to be up at these levels here. So it looks like it'll come down. When is the big question? We did have a relatively negative looking bar on Friday. And the reason I say relatively negative, it didn't finish right at the lows. It did manage to have a bit of a pop to the upside, but could be a little bit of profit taking coming in. I don't really see or hear much that would suggest that the S&P is going to come down, which is some of the issue. So people might remain excited on it. But we did see a little bit of downside S&P. NASDAQ probably a little bit more significant. And possibly this turns into an evening star. And again, NASDAQ could come to these levels down here. And then the buying will probably continue and start to come back in again. If you look at this trend line down here, that really suggests that it's towards the end of the month. And seasonally, we do have a down week this week with stock. So I'm wondering how deep it can come down before it just starts to rally again in a week or so. We've obviously had the bill passed now through the Senate. So Biden's got his infrastructure bill through. Does that continue to boost equities? Difficult to know because the equities are boosted on relatively negative news to a degree. You know, it's bounding to the upside on things that don't seem to be quite as fundamentally solid as they should be for it to bound to the upside. So when you get this good news, things might start to turn around. Buy the news, buy the rumor, sell the news kind of thing. Mm-hmm. So, what do we look for this? Now you're looking at the pound against the dollar, which I think is interesting because we need to look at the dollar, and the dollar has also did actually provide quite a negative looking bar on Friday. So it would suggest some downside. Now, I think that really does start to lead us into gold and silver, and I've looked. I have placed a trade on silver. My thing was this inverted head and shoulders, and it looks like it might take a few days still to flush out. It might fluctuate around these points here, but this one looks like it's going to me. I prefer gold.
I like that candle that's formed the right shoulder too.
Yeah, me too. Yeah. So let's see if we can tidy this right up here. It's probably in there, but it's not 100% accurate where it could be, but it looks like it could be in there. But lovely inverted head and shoulders, and as you say, lovely candle that it bounced away from. So I've got in at 23.95, and we're currently around about 20% above that particular buy price, but it might fluctuate around here. There's a few pivots and this, that, and the other if you're looking at the intraday charts. But I think this is a long-term thing, and I'm really looking to hold on to this because there could be some issues down the road, and we've been looking at both gold and silver as inflation hedges. And look at gold as well. Friday's bar on gold was very, very positive. Takes us right to the top of the range. Well, nearer the top of the range, not quite there, but it's close enough. So can gold now start to boost to the upside? It needs to clear these levels, but if it does, well, in fact, you can see here it is at the top of the range. If it gets through there, then it looks like, if you were to measure the pattern, which is probably a triangle. I think you could probably draw a few in here, but if you were to, look at the triangle as a pattern, it would suggest that gold, if it breaks out at some point relatively soon, could get way beyond these highs here. If the triangle was to play out, if this is the correct pattern, as I say, it may not be. It might be something else. It might be that. It might be a few different things. But that would certainly suggest that either way, if gold bursts through this level, it's got some legs. It's got some room to travel. I prefer silver because of the ratio. Gold-silver ratio is currently at 75, and anything near 80 does suggest that silver's undervalued versus gold. So it's nearer the 80 than it is the other end of the spectrum, which is, you know, closer to kind of 65, 60, that sort of area. So so I prefer silver slightly. You know, if you've got to choose one of them, and the inflation
that is a weekly game changer bar, and it does look to me to have broken a resistance trend line as well, fairly dramatically.
You're talking about this one here?
Yeah.
Yeah, I agree. Yeah, I agree. I think gold's potential in its way. And if you look back historically, the interesting thing about gold is that even though it is an inflation hedge, one of the big triggers with gold and silver is tapering. So if you sort of like look historically through what happens when the US, when the Fed start to taper, gold and silver then start to rally. So this may be what we were looking for while we were sort of like trying to get what's going to be the detail. We keep getting CPI data, which is continuing to go up and up and up. Quicksilver, I like that, John. In fact, you should buy some, John, considering the name. You know, if you're looking at the triggers with the CPIs, maybe that was the wrong trigger. The taper could be the trigger. So, you know, as I say, historically, it does tend to kind of start to rally around then. It's around the end of November, it does move fast. I think with silver, you've got to look at it as a longer term play. You know, when I'm looking at silver, I'm not really interested in trading it. Look at this on the weekly, mate. You said that the daily bar was nice. Look at that on the weekly.
Yeah, nice. Yep.
Yeah,
except
really
it's
good.
It's got a green body. It's the thing I don't like.
You don't like that, but
red body. I want.
The other thing with silver is I think that it's probably better because it's probably traded this previous zone, you know, where things were trapped in this area here. The high of that particular zone is there, and I think it's tested that. Gold hasn't really done the same thing, you know, that this is the zone with gold, and it's a long way up from that. So there's a few reasons that I prefer silver, and as I say, I think you can play this without having to worry too much about trading it, because silver's price really should be double what it is, if not higher. So if silver goes from 24 here to 50, which is well within reach, then you don't really need to be putting, you know, lots of cash on it. You could put in, I don't know, in fact, I wouldn't even name a number, but whatever people are comfortable with. But you could put in a decent amount of cash and look to double your money in a period of, I think, a year. Which would be fantastic, you know, to see whatever it is that you're trading go up 100% would be good. So that's the way I'm looking at it anyway, more as an investment than a trade. And as I say, you know, if you think about what's driving this market right now, I think there are drivers for gold and silver. Looking at oil, interesting rhetoric really coming from the US government and OPEC. And it really does depend on whether OPEC buckle, whether oil will start to ease back. But the chart does suggest that we have probably got some sort of distribution going on here. Lower low here, and you're probably looking for the lower high to be somewhere in this area, because this is the previous breakout, the previous support level. So does that support now become resistance? Well, if it was acting, I suppose that the way that we would traditionally look at the start of a trend, this is where you pick it up. You know, this is where you pick it up to the downside, and then it's just a question of do you trust the rhetoric, and if you don't, this is where you probably would trade it and put on, you know, ease into it rather than looking at something that you're going to, you know, get into and hold, because oil's been so bullish that that this would be a counter trend trade, and quite difficult in some respects. So with that one, I wouldn't really want to do something which was a sell and hold. It'd probably be more of a short to go long if possible, because you'd really want to stay on the long side of oil ultimately. And you can see that the levels are probably somewhere down here, if we're just looking at previous levels of support and resistance. So markets might come down, but as I say, the news isn't there. So now we come onto that a little bit. You know, what is the driver? What's going to be the driver for the S&P to come down, the Nasdaq to come down, oil maybe to come down? Well, we know it's OPEC for oil, but for the likes of the S&P, we do have Jerome Powell again talking this week. Let me just click these back.
Yeah, it's speeches on week again.
Yeah, yeah. And he'll probably deflect quite a lot as he always does. What's that? That's November the 11th. So what I want is November not tomorrow, the 8th. Here we go. So yeah, Jerome Powell out this week. I don't know, and also Governor Bailey, which is interesting for your pound trade. You know, do they say something? Is there a little glint in there? Do they you know, finally blow cover, which they haven't done so far? They've you know, Jerome Powell was pretty professional in the way that he handled any talk of interest rate hikes. He's out again tomorrow, so really it's a whole week. CPI data on Wednesday. It's a whole week where really inflation, the Fed are very, very much in focus, and this might be enough just to get traders just to take some profit. You know, as I say, I don't think it's a turnaround by any stretch this early in the picture, but it might be just enough for traders to take profit, which keeps me away from the upside. Downside is going to be difficult because of the strong move. You know, I think that what John's saying about silver moving fast, I think a lot of this stuff might well move fast and run quite a few people over. So you're probably not with the overall trend if you trade this week. You know, that the charts are saying go in the opposite direction, but that's not the overall trend. So I think for anybody that is new to trading, or even those that aren't, they might just want to sit it out, you know, and wait for these lows, see if these lows start to come back into play, let the market pull back a bit and then start to move in the opposite direction. I'm going to finally look at the bond yield as well, because we were talking about the fact that the 10-year bond yield, 2-year, 10-year and 30-year are all going to be, in a way, interest rates through the back door. And I just don't think this is really interesting. You've got this head and shoulders pattern forming here, or certainly what's looking like a distribution pattern. But we're right on the neckline. This is the yield that we're looking at here. So, are we like to see bonds bought up into the next level? We got this trend line coming in from the bottom. We got this horizontal level here, right on top of the neckline of the head and shoulders pattern. So to see a rally in the bond price, in the bond yield, I think is achievable. And again, it might be, you know, this week we start to see that move higher. Stocks come off a little bit. Maybe gold and silver fluctuate around as well, because with bond yields going up, gold and silver don't tend to perform as well. So it might be a bit of a transition week, maybe from what I'm seeing.
Yeah, nice little channel sitting there, and I've got an optional neckline, pretty much where that dotted line is, a little bit lower.
Yeah, I know what you mean. Yeah. Yeah, I see that too. Yeah, because it could be that this is the head and shoulders here. Yeah.
Yeah, and if that's the case, I can probably see a bounce off that trend line back to that level.
Yeah, so you're looking along here, aren't you?
Got a big form over there in July as well.
Yeah. Lots of things to consider, isn't there? Because you know, there's a few different things. You know, I suppose we should probably look at the VIX, and the VIX has been down in the doldrums, and but really interesting 3-bar pattern here. You know, that is a morning star, and a pretty strong morning star as well. I mean, not the textbook morning star because of this bar, but it does have the same kind of effect where it wipes out the price action of the first bar down. And of course, you know, if you look at the support and resistance levels on the VIX, then we are really there as well. You know, we're close depending on where you start and finish your trend line, but it looks like it could be along here, which does suggest that the VIX might move to the upside. I mean, we could go on looking at different correlations. Aussie yen also moving down so far. You know, this would also suggest a little bit of risk off coming into play. But I think my message really here that I'm getting from the market, we haven't even looked at the FTSE yet because we're looking at the kind of global picture, but the message I'm getting from the market is that there might well be some profit taking. Be very careful if you are trading in that direction, but moving, continuing to the trend continuation to the upside. It probably isn't here. It might be next week, but it might be at the end of the week, but it probably isn't here. So a bit of patience, I think, might be wise at this stage.
Yeah, look, I can't disagree with that. I've got the yen pairs looking like they're at resistance. How can you get excited about the yen? It's a tough call, really, and that goes with what you're saying. If you're thinking about Aussie yen, Euro yen, and I'll go through Swissy yen, dollar yen, Kiwi yen, they're all showing me weekly game changer bars to the short side. But gee, that's a tough call to be playing.
Yes. Interestingly, on the yen as well, overlaying some other data with the yen, the COT data is very, very solid for the yen, very positive. It's the most bullish currency of all the COTs in the COT report.
Is that just on the fact that it's been so weak for so long?
Yeah. I mean, this is the thing. I mean, the reason that that these commercial traders buy and sell specific currencies is sometimes more of a hedge. Concern that the valuation has kind of gone too far too fast, and then the hedge starts to come into play. Same with the dollar. The dollar's the other end of the spectrum. The dollar's the weakest of all the COT data, and again, it might that could be a hedge against the strength. It doesn't mean necessarily that they are all out short the dollar. It just means that they are now cutting back long positions and maybe sort of adding some short positions as a hedge of the ones that they already own long. So it's not going to be a hard and fast thing. And also the seasonals don't suggest yen strength yet. That it's still in a bit of a retracement sort of phase on the yen. So it might be a couple of weeks out before we start to see that change. And also, the driver, then you go to the fundamentals. The driver isn't really there. Yen fundamentals aren't too bad. Euro is the weaker. Euro is an absolute dog when it comes down to the fundamentals. And I think a lot of them have started to go into alignment. As the global economy opens up, the cogs start turning, right the way around the world, and each country starts to kind of, do pretty well again. But the Eurozone is still, I think they started from a lower base, and then they've got further to go, quite a bit further to go. So fundamentals don't suggest that the euro is going to be a particularly bullish currency, and that's one that probably is also at support against many of them. But you just I wouldn't want to have it. Quick question: why have all other majors miners left the Kiwi high and dry on interest rates? That's a really, really good point, mate. But I don't think that's. I think what's happened with the Kiwi is I wonder whether they've moved too early. I wonder whether they maybe made an assumption that this was coming, and they've moved too early. They've possibly been too clever for their own good. They may turn out to be the clever ones, out of everybody, because they are the fish swimming in the opposite direction right now. So I don't know, whether they've done the right thing there, and only time will tell. It seems strange. I've got to say, it seems very strange for a country like New Zealand to be the first to break cover.
Yeah, that's a great question, and I think that your second part of the question, John, is probably exactly what Ash is talking about. How are they going to do that? But the reverse side of that, and we've spoken about this at length, I suppose, both Australia and New Zealand look to be coming out of COVID better than most economies. And I guess that the Kiwi the RBNZ have done this before. It's not the first time they've moved first. And I think they just maybe get a little trigger happy when they start to hear how the economy is bouncing back and how inflation's going to kick in and blah, 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 blah. Maybe that's the case. Maybe they've got a hair trigger. I don't know.
So they've got form. They've got form. This is the way that they tend to react. Yeah, and I guess it's maybe difficult to human nature's a wonderful thing, isn't it? And if that's their nature, then they are the scorpion that stings the fox, no matter how badly it could harm them. And so I don't know. I mean, it's difficult, from our perspective, because we don't know every single data point they're looking at. But they may well have missed something, that they may well have been focused so much on inflation and so much on the other data, employment data, and the internal data, that they're not focusing on the external data, because actually the numbers justify it in many respects. But the what you're saying about the trade is an aspect that possibly, I mean, maybe it's that they look at trade and think, actually, that's not the biggest concern right now. The biggest concern is the cost of living, and that's the way that we're going to handle it, because eventually people will catch up. So yeah, it's an interesting one with the Kiwi, and mainly because it's something we're going to try and trade. What happens next? The danger, of course, when you move too early, is that you have to reverse the decision. But I guess they're probably now sweating on the fact that everybody will start to move, and now with the US stating that they're going to be tapering, then people are starting to move. So they might have a few months where there's a bit of catch up being played, but maybe it's not too bad. I don't know.
But yes, they are isolated, John. That seems to be the case. And the other reserve banks are tending now to cool their heels, aren't they, on interest rates? Interesting, really interesting scenario. But there's no reason to think that the Kiwi will weaken anytime soon on the back of that, because at the end of the day,
looking at Kiwi pairs. I mean, it's, the pound against that, yeah. Well, I suppose with other central banks, the Fed, Kiwi up against the Fed and the Bank of England, basically saying we're going a lot slower, then I guess you continue to stick with the Kiwi long, just on that one metric alone, that they're going to be there for longer, and with a carry trade alone, that would suggest that the Kiwi would be the place that people would have some free money coming in.
Yep.
So in some respects, it's quite useful that they're the only ones that are broken cover, because it makes it a lot more simple. What's the Kiwi doing against the dollar? Yeah, you look at the Kiwi dollar, and there is again a pretty good burst through for this level. Unless Jerome Powell, says something this week, it certainly looks like the Kiwi should go even higher from these particular points. So, I mean, what's really good, John, is that you're thinking about the fundamentals, and at least you have a fundamental reason to go long Kiwi. So you get a setup here, you're going to be a lot more comfortable about going, right, let's take a Kiwi dollar long or Kiwi pound long. Both those two central banks have come out and said that they aren't moving. Kiwi euro as well. Euro Kiwi, the right way round, of course. Does it help the Kiwi clear their debt? I don't see how it could, because really now the debt's got more expensive. So I don't see how it could, because really with inflation, that some of the reason that central banks love inflation is because you can inflate away the debt. But you can't really do that if they're controlling it, if they start to control it. So I don't see how that would be I mean, maybe there's something I'll be missing, but I don't see how that would be the reason behind it. I don't see how that would be the equation, that they'd get rid of their debt faster because they're raising interest rates. That seems to me counterintuitive, but I might be wrong.
Well, I suppose because essentially the Kiwi rallies on the back of that, and their debt is not in Kiwi dollars, probably in US dollars, one would imagine. So the differential does then make a difference.
Right.
That would be the way I would read it. So
that's a fair point.
That side of it would make sense to me.
Yeah, that is a fair point. Yeah, no, and maybe that's why they're doing it too. I don't know.
Maybe.
See, New Zealand's economy is actually pretty solid. the unemployment data is good, and you notice this about the smaller nations, the Kiwi and the Swissy are, and the Swiss economy. These smaller nations have just got, because they've got this sovereignty and they've got the ability to control things for themselves. Then they can probably get away with a few mistakes. I don't think the European Union's got quite the same power to do that, because while one economy does well in the European Union with a decision, many others do quite badly. So yeah, I mean, maybe they're right on the money, but I think that the significant thing is that the Kiwi is, you've got a reason to buy it. That's the big thing. Whether you have a setup is the big question. It certainly looks like there's a setup here. This is the point you bring in your indicators and see whether your indicators are lining up with the fundamental reason to buy it and the clean chart, what the clean chart's telling you, which is certainly a break of resistance and a return to that particular point.
Okay, we should have a look at the currencies I'm looking at before George comes in. He's only about 7 or 8 minutes away.
Let's do it.
And there's not too many, actually. The game changer bars are few, and as I mentioned before, which was going right into what Ash was talking about with these resistance levels and, of course, support levels going the other direction, may not necessarily mean that we're going to reverse, but profit taking does seem to be an option here. I'm going to look very, very quickly at the euro versus the dollar, because we do. And when I see that, I just want to change charts. I don't want to trade it. That's in a horrible, horrible place right now. This could oscillate in between here for a day, 2 days, 3 days a week before it actually moves. And as to which way it's going to move, well, I'd have to defer to the dollar index for that. And the dollar index is telling me that we're still in this range. We visited the top, put in a doji bar on the week, which makes it a little bit tough to say, okay, what direction is next? But if I play my game says I trade off the top to the bottom, then that's exactly what I'll be looking for. So I'll be looking for probably a little bit of a, or it doesn't really matter how much of a bit, but if there is a rally here and we get a lower high, which backs up the reversal bar, then that's probably the place I'd be looking. On the smaller time frames, that seems to be underway. We've had a little bit of a build up here. So a lower high in this vicinity makes perfect sense to me. Of course, I haven't worked out how to trade the dollar index yet, but the euro, if you want to reverse that, you would be looking for the euro to come down here a little bit and put in a higher low, backing up the double bottom, if you like. That's a 30-minute chart that we're looking at. So, yeah, good luck with that. Trading it down to there, not for me. Resist again, always resistance break, get underneath it. You've got to get underneath the pivots now and then retest before you'd go short. And your reward's probably not great as well. So you just stay away from the euro at the moment, I believe. But the dollar being at that resistance level, again, in the top of that range, I would certainly be looking for a lower high and therefore a higher low in the reverse, like euro dollar, Aussie dollar, Kiwi dollar, all of those sorts of currency pairs. Okay, but to the game changer bars for the week, Aussie yen, this is the first of them. It's very, very tight, I've got to say. And on this broker, which was what, IFS, on this broker, I didn't have a look on Fusion, but we'll go with this. It is a game changer bar by, I think, 0.1 of a pip. Game changer bar, of course, has to have a higher than the previous week and close on or near its low. It's done both of those things, but barely. But it does give me a directional bias for probably early in the week, as Ash has said. But I'd like to see it come back and test the weekly pivot. That would be a retest of the neckline as I have it, which is that white line there. Neckline, not inverted, not a head and shoulders, but a range which has been broken. Retest of that all makes sense to me on a small time frame. If I got that at the weekly pivot, I think that's worthy of our attention. And reasonable target area, which is down here somewhere. So that makes sense if you can get into that. It could be 5-6 to 1, something like that, if it does set up. To actually trade it, as I said before, from a let's even say logical point of view, and on a fundamental basis, it's a tough call because the yen is so weak. But again, the yen's been weak for a long time, and the COTs are telling us that there's a positional change there as well. So look, I'm on board with it if it does set up, but it has to set up, because I just can't go, okay, Aussie's going to weaken against the yen, because that doesn't make any sense in my brain cells. And the same could be said of most of these. Swissy yen is the next of them, and look, very, very similar chart. Game changer bar on the weekly is quite clear, yet it has come off its bottom, rather. Clear reversal bar, no question, but I can't trade that. Some people probably can, but I can't trade that. Again, I'll be waiting for something to happen around the weekly pivot area, and on a smaller time frame, that looks possible. Again, you've had a break of, let's call it a neckline if you like, and a retest of that. Makes sense to me to go short here, but not without that weekly pivot test, I don't believe. So that's Swissy yen. And again, I just keep saying it, it's really tough to be calling the yen bullish. Really is. Next one is Euro Aussie. And this is a game changer bar to the high side. So looking for longs here. Reasonable. It has come off a decent level, which is right on there. So that does make sense to me. You could probably even choose to trade that bar. Not my style in this position, because again, it's the first move. I want to wait for the second, and it's the same story. Let it come back and retrace, hit something of support. Weekly pivot in this case would make perfect sense. High or low in here, away you go. That's Euro Aussie. There are two more. Kiwi yen. This is the only mention of the Kiwi, but exactly the same as the Aussie. And you had a game changer bar, which is pretty clear. Again, it's come off as low a little bit. Same story. I no need to repeat it. Wait for the pullback to the weekly pivot. That appears to have happened on the daily chart. It has. So an interesting bar here forming. I won't like that, because it'll be a red-bodied bar if I am to trade it, or if I was looking to trade it. But it would make sense if it was that size of a bar, because you can get your first take profit in before the daily pivot. So maybe that's worth looking at on a smaller time frame. That's the hourly. Let me just go a bit wider on that. Yeah, I haven't really got a strong trade line, but that one will do. It kind of hasn't formed yet, but yep, above there, back underneath, retest the confluence. Happy days. I think you can trade that short, taking profit the daily pivot, leave it open in case it does go. So that makes sense, except again, we're trading against a very, very weak currency pair, or a very, very weak currency in the yen, with a very, very strong currency, as we just discussed, in the Kiwi. It's a tough one. It really is a tough one to trade, but it does look to be there. Dollar yen is the last of them. And dollar yen is, once again, a clear game changer bar, higher than the previous high, closed on or near its low. Same story. Wait for that lower high. Look to trade it short, taking profit before the pivot there. In this case, the monthly pivot. The only other one is the Game Changer Plus. And the Game Changer Plus is on my old mate, EuroCAD. There's only one of them. So this could be a scale in for me. Except, hang on, I'll get this right. That has, I've done this on a different chart, obviously. That's EuroCAD. Oh, no, that's right. Game changer to the short side. Again, come off its low a little bit, followed by an inside bar. It's a bloody big one, I've got to say. Much prefer to see these small bars, these to be small bars, rather than the big bar that it is. That said, we are also at a support level. So it is tough to trade this short right now, but it's giving me the indication that the next breakout is going to be short. So with that in mind, and near the top of the range, what I'd really be looking for is price to hit that monthly pivot, if it can possibly get there, then come back into the range, give me a lower high in here somewhere, or a retest of the breakout, and then I can look to trade it short, taking profit before the lows. That makes perfect sense to me. So don't really care what time frame. Already we have potential resistance here. So this makes a lot of sense. Break, consolidate, back underneath, retest, get under the pivots even, retest, and get your entry under there. And I think that makes perfect sense, and would probably be my trade of the week if it sets up. So there you go. Guess what?
What?
Can't remember. No, it's time to go to the small wee time frames and welcome our special, very special Monday guest as always. Hello, George. How are you, bud?
I'm well, Jeff. How you doing?
Oh, mate, I'm wrecked. I'm absolutely wrecked. Had a very, very busy weekend in the bamboo.
Yeah, is it harvest time or what? What's happening?
No, well, no. It's growing time. So the thing with bamboo is it shoots up like crazy at this time of year, and you've then got to wait until it gets to its full height, starts to branch from the top down, and once that happens, then you can harvest. But no, not harvest yet. But
Okay.
Lots of hard work, mate. Tell you, I'm too old for it. You're a young fella. What are you doing for the next few weeks?
You just caught me off guard there. I mean, the biggest thing on my calendar is 17 days from the 22nd of December, what I call our CNA holidays, Christmas, New Year, and anniversary.
Aha, three in one.
New Year, anniversary, January. So 3 weeks of decadent living and all sorts of things, you know. But
how many years?
Sorry?
How many years now, anniversary?
12.
Wow.
Still a young man, you know, if you think.
You are, mate. Absolutely. What's that mean in gift terms? What have you got to buy your wife for her 12th anniversary? Is it a tin one or something like that?
Yeah, it's one of those. I always, kind of sneak into your wardrobe and steal all the things that I'm gonna get some jewelry, but I'm always gonna get the right size. So beginning of the year, I start asking her very gently, gee, what are you kind of missing? She doesn't know what's happening. So I've stolen a few trinkets. Hopefully she's not gonna look for them over Christmas. Otherwise, I'm in trouble.
Yeah, you've got to do the pre-prep, haven't you, George? Yeah, I know what you mean. I keep my ears to the ground all year, and just so I don't forget, I put it in my Amazon basket. I don't buy it, but I put it in my Amazon basket just so it's there. So I remember.
Hey, that's a good idea because I always forget, and there are many hints. I can assure you. Hints like rock hard. It's like it's at Christmas. Here's exactly what I want. There's no hint. This is what I want.
Do you always buy a pneumatic drill?
Pretty much.
Get to work, Alison. Yeah.
Oh, brilliant, man.
So, what are we looking at this week, George? Anything specific? We've just been talking about the markets and how you may well be counter trend trading, on some of these things this week because they've gone up so much. And it looks like there's a little bit of relief coming in. The S&P, great one to start with. So this is where I started the analysis as well. Last Friday's was interesting.
It definitely is interesting because, I mean, that green bar has just been going up. It's an all-time high. But you gotta, when you see all of this, you gotta be asking yourself the questions. At some point, there has to be a correction. Now, that correction typically is driven first by the bulls who've got their stop somewhere down here. They've got to take profits at some stage,
Yeah.
So that will drive the correction. But then, of course, the bears will jump in trying to, force just a break of the trend line. And once we have a break of the trend line, the bulls have got resolve. They'll come back and try and break above that. But then the bears, of course, want to create a lower high. So that for me is telling. If you look at everything we've had, when we had a doji, just breaking out of this small thing here, but the bulls have been super strong. But they failed to just close at the high there. That's very, very strong evidence of bears selling into the close. So it's going to be interesting to see. Yeah,
would you look for it to come back to where you got your dotted line there, George? Because that looks like the foundation point, doesn't it?
Yes. So that's we've got that.
Not that one. Sorry, the one that starts on the 30th. Well, around about the third. Yeah.
Yeah. Okay. Well, that's.
Would you look for it to come back there, or is that too deep?
No, it's not too deep because you've got to test the breakout of the double top, right? So it can come down to here. And that's the point where if the bulls step out as the bears are selling, if we get a couple of strong candles, the bulls will have to come back here to hold that up. And I'll tell you why. Because what the bulls obviously wanna get to is, we had this breakout above that. The bulls want to get a measured move. There is the high, there's the low, there is the measured move. So the bulls are saying, hang on, we broke above that quite strongly. We can come back, create a trading range, no matter how long it lasts. But that's the objective if you're a bull.
Yeah.
So worthwhile looking at now, in terms of the way that I then look to trade, because I have that mindset. I've got to see some kind of a strong reversal pattern here, a strong bull bear candle or something. Once I see that, I can go to the lower time frame and just trade that. So as it is now, this is not on my watch list. So everything that we have here showing daily is not on my execution list rather.
So this with the S&P, you're actually looking at the short. You're not looking long. You're looking short.
I'm looking for a short setup, the daily, and once I see that, then I'm just going to go down to the what did Jeff call it? The shorter time frame, to the 5 minute.
The scary things, yeah.
Yeah. Do you know what it is for me as well, George? It's trying to ascertain what's going to be the driver to bring us down. Yes, I get what you're saying, profit taking, but they still need some kind of motivation to take some profit. Over the weekends, the best that I could find was that Elon Musk tweeted, "Should I sell 10% of my Tesla shares?" And people said yes. So that might kind of spook a little bit, with Tesla being such a huge player now. But the Fed aren't really playing ball for downside. We just got this trillions and trillions of dollar package from the government for infrastructure. Right. What's going to spook the market enough to bring us down is the big question. And it always comes out of the blue, isn't it? It's always something that you don't expect. But right now, it's just very difficult to kind of see the bulls losing their grip on the move. And I guess my question to you would be, would there be anything that you would potentially see that could drive us up to that measured move before we retrace back down again?
Now, in terms of fundamentals, I'm pretty boring.
Yeah,
I don't study them. I don't even look at the news except for the red indicators on my calendar and staying out of the market. And the reason I don't do that, I suppose, but I think cleverly, so I don't confuse guys. The reason I don't do that is that whatever the fundamental drive is, whether it's when the market is closed or during the market is open, it will quickly show itself up in price patterns that have repeated themselves for hundreds of years,
Sure.
So what you're saying right now to me is making sense here. Okay, so that's probably what's happening behind the scenes.
Yeah.
But for me, I'm saying this is unsustainable. There always has to be a correction.
Yes.
When the market has gone up for so many days without any pullback. And that correction is simply, I think Jeff and I have had this discussion before, where I put my stop at all these higher lows. And you kind of sitting there and you say, hang on, guys, we need to just take some risk off the market. So even if it was a 5 minute time frame, I would have my stop here. And I can, at this stage, probably, if this was a measured move to there, take half of the risk off and leave one in the market. So that's what goes through technical price action trading mindset. But of course, what's going to force that to happen is everything else that's back to what's happening in the market at the end, because everything that we call is likely to happen. Remember, it's always 60. We are always 100% right 60% of the time. So we could have a huge acceleration. Okay. Yeah. And then the bears will just step aside and say, well, we want to wait for that measured move because we can all see that, and then aggressively sell and make it fail there. Yeah. So that's what is it? That 4830 kind of level. Yeah. Exactly the measured move of this trading range.
Yeah. So it's like it's almost like a 3% move down, potentially 3% move up. Yeah.
Yeah. That's kind of what we're looking at.
Interesting level. I think today's quite interesting. You know, do we end up with a bit of an evening star pattern by the end of today? Probably not. I don't know. Is Jerome Powell out today? I think he might be actually. So possibly.
Right. So I mean, if when I look at my charts very late at night just to see what's happening, if we got a bear candle here, whether it's just a slight inside candle or a big inside candle, that for me. Yeah. Although on the daily time frame, you got to worry about this rise in 10 EMA or 20 EMA. But for me, I can go to the 5-minute time frame and look for a trade, beneath that low, and just take it as long as the day gives us the opportunity. If it bounces and reverses, we just do a reversal trade and take it up again.
Yeah.
But I've got to wait to see that what happens today.
Good stuff.
I'm always tempted to start studying fundamentals, but it's just I don't want to spend another 10 years becoming a master. I'm happy with price action trading.
I mean, I don't think it's really necessary. If and I always think that you can get really distracted by getting drawn into the way that somebody else looks at the market when you're already making money. And I think it's difficult, isn't it? Because if somebody's making 3%, they want to make 4% or 5% or 6%. But actually, I think there's got to be at some point to say, what the percentage I'm making money. I'm making money. This is stress-free, because I know what I'm doing. Why am I going to add myself extra work and extra education when I don't need to? Trading should be boring to a lot of, to a greater or less degree. We're meant to be in the market, pull some cash out and go and get on with our day. So I don't know whether it's necessary. Personally, that's the way I kind of see it. It's just the way that I look at things. But I don't. I think Jeff would probably also say the same thing. How many times you get distracted by what somebody else is doing and it actually just puts you off kilter, and you're better off just sticking with what you know.
Yes, but because we're humans and we perceive others making money in a different way, we probably go, okay, if I add that to there, then I can make 3% here and 4% here. Shit, that's 7%. Why don't I do that? But it doesn't work that way. It does not work that way.
You actually might end up at minus 3% when it's
you may well.
Yeah, exactly. Yeah, you get yourself into negative situations.
So yes, it's all about finding your own level, really.
And also, I think it's quite cool that now you're coming on a Monday. I really like the fact that we're all looking at the market in a different way. I think it's brilliant.
Mm.
Yeah. Now, which ones do you want to look at of these daily ones? I'll look at the ones with hourly. Those are on my execution list. So I'm looking for trades there. FTSE, shall we look at quickly?
Let's look at the FTSE, and then I'll be interested to get your opinion on gold as well.
Yeah, gold is on my list as a sell. So, but what I'll tell you.
Oh, okay. Then I'm definitely interested in that.
Yeah. So FTSE, I mean, that's the high of the year that we had. I mean, we are in a bullish trend, but now when you look at that, is that a breakout, or does that look like a bull trend in a trading range? To me, it looks like a bull trend in a trading range, which is still to form. So at some point, I suspect we might get a double top somewhere, maybe here or a little bit later, and have the bear leg coming in, might come and test that or test these lows. But until I see that, I'm not going to jump in on this bull trend. And part of the reason is that whenever I see kind of 3 pushes up, which is a wedge pattern, the market has tried 3 times to break out, it's failed. So for me, that top becomes quite significant. At this stage, even though we've tried to break above that, failed, we closed within that. I mean, if you just look at your closes, we closed within that. So I'm now waiting to see that if out of here we get a double top and a lower high, then I could trade any strong lower high signals until we get to the bottom of the trading range. But that for me is indicating there's a potential topping pattern that's going to come, and then a reversal down, whether to test this kind of double top or these lows. It's all the same kind of zone. So that's my present thinking on FTSE. What are your thoughts presently?
Well, do you know, I'm looking at this on the monthly. If you go to the monthly,
yep,
on the FTSE,
okay,
and you draw a trend line from the 1st of January 2018 and extrapolate it right.
First 2018.
Yeah, that high, December, January 2018, the high, the absolute high that you've got there.
Yeah.
There, and then extrapolate it right. That's what I'm looking at. So yeah, touch those 2 top lines there. I'm looking at that with the FTSE, and I think that's what is one of those things. Either the trend line meets the price, or the price meets the trend line. It just depends if it floats around here for a while. If it floats around here for a while, then obviously the trend line is going to eventually come into the price. If it tries to get a burst to the upside and touches the trend line, I would look at that as a bit of a blow off top, and then I'd be looking for downside. But that trend line is quite pivotal for me.
Let's have a look and see where that shows on the daily, that trend line. Okay, still a little bit way up, so but still that's a form of strong resistance. So we might still carry on, with this kind of trading range, sloped up broad channel until we get to that.
I'll tell you what's interesting about the difference with your trend line and mine. I'm looking on the futures. I know you've got it on the 100, so I'm not sure which is better. But my trend line is 0.5% higher than the high, so only 30 pips higher than the high.
Okay.
On the futures. So
on the future, okay.
Yeah, on FTSE futures. So I think we're pretty much there for the FTSE to be coming down.
Well, that's very interesting. So it would kind of fit in with what I'm looking for to say that wedge is a key for me. Failed to break above it, so I'm looking for a double top somewhere within here, and then a lower high. Fantastic. I mean, if I see that, wait for the double top lower high. If I see that signal here, then I'm jumping straight to the 5 minute and looking for.
You see, I find this UK 100s that the MT4 the broker has come up with. I find it a really difficult chart to look at in many respects, because it's not the absolute FTSE and it's not the futures. It's kind of like this mix between the two. So what I think would be a much more interesting chart, which I will have a quick look at in a moment, is the actual FTSE. Where is that? Because that's the big brother, right? That's what we should be looking at. Where's the resistance on the FTSE 100s cash on and we have to go to investing.com or something like that to find the chart. But I'll be interested to see what that says, because I say the futures is pretty much there. It's got like 30 pips more above that high. And so that means the trend line could meet it a lot sooner. Within the next few days, the trend line could meet price. And that would suggest what you're saying, that this does look like it could be actually around about high point. Big number as well. What, 7,300 is that? So, we are at that round number as well.
Yeah. We spot on 7,304, 7,305 presently. So, well, the good thing about price action trading, this could be oranges, right? If you didn't tell me that it's UK 100 or the FTSE or gold, you just said, George, there's a chart. How are you going to trade it? I just look at it the same way. then I just got to worry about lot sizing and
Yes,
calculating
yeah.
the risk. But otherwise, a chart is a chart, whether it's 5 minutes, 1 hour, monthly, etc. But it's just interesting the kind of positive correlation in terms of how we're thinking about the same kind of charts, but represented, maybe more accurately on yours and this mix that they've come up with.
My thoughts are exactly in line with both of yours, but mine is far more simple. There is a rising channel there, in my humble opinion, at which we have found the top. Now we're looking to come off the top and go to the bottom. So for me, it's just a lower high that I'm looking for, and away I go.
Okay. Really fun.
But we're all the same. We're pretty much all on the same page.
Yeah, well, and this is I think it is an interesting point, because we basically brought in the FTSE and the S&P, two global equities, and we're all saying, technically speaking, this is potentially, it's got the chance to roll over a bit here. And as I say, the driver isn't there, so it says to me that we're probably waiting for it, but we're all sort of anticipating that will be the next thing to happen, rather than it's just to continue to the high side.
Yeah. So November might give us some good opportunities there. So let's keep looking at that. I don't know who trades Brent crude oil, but we've had this break below a trend line, which is pretty good for the bears. But have a look at it. There's no strong successive bear candles until we kind of get here. Then we're met by a doji. Now, what that simply says to me, again, is that correction in the market, profit taking, bears trying to make it fail, but they have a lot of work to do. You could even go up a little bit more to the weekly time frame to see it a bit clearly. So there's our present high. We broke up above this level. As far as the bulls are concerned, say, well, okay, we broke above that. So break up, follow through, couple of strong candles. So happy to take some profits, or the bears to try and break that out. But look at these resistance levels up here. That's where I think the market wants to go, 92, 93, 94 level. It's a measured move, this high, that low. That's the measured move. If you look at this small little trading range here, that's probably the measured move. And again, if you look at the break above the low of the year, high of last year, there's a measured move. So I think that's the magnet that's going to pull the market up. There's no real strength here if you look at what the weekly time.
That's fascinating, mate. Do you use these measured moves, Jeff? Just
muted you.
Some would say that's a blessing, George. However, the answer was no, I don't. But I think because I've heard so much of what George is trading, and you use them, Ash, to a degree. Julian uses them to good effect as well. So I totally see merit in them. I think if they married to a level that I'm seeing as well, then that would certainly add potency to the trade. If that all makes sense.
No, it makes sense. It definitely makes sense, because so what will happen in this case, if we do have the breakout, the level you're looking for is when the market bounces off that, then you say, okay, I've got a top. But then the question is, it's not just, we're not surprised. So these measured moves, we're not surprised. Either we're taking profits there, we're now starting to look for our reversals. So the top will probably come in, then we look for that lower high.
Very close to my method too, George. Very, very close.
Yeah. Now, Jeff, very quickly. So I've got 4 charts here, which are on just on the hourly. Now, there's a lot of guys that I talk to. Sometimes they accuse me for, what do they say? You assume that we can follow your thought processes very quickly. So when I say I go from the weekly, I go to the daily, I see a setup, then I go to the 5-minute time frame, there's a little step which I kind of don't talk about a lot because I don't want to get bogged there, but it's very critical. So let's take Hong Kong 50, Hang Seng, just to illustrate that. So for me, I'm looking for shorts on the Hang Seng. Okay, breakout, pullback, beautiful setup, follow through. I'm looking for shorts, a break beneath here. Now, you could go straight to the 5-minute and look for that, which means then you're going to be glued on your screen all day looking for it. Or you could just take an immediate step, just go to the hourly time frame and analyze that. And when you see the setup on the hourly time frame, then immediately go to the 5-minute and start to trade. So it just takes away a lot of, especially you've got 7 charts that you're looking at, takes away a lot of processing. So on the hourly, already there is this convergent triangle. Convergent triangle is a breakout mode. We've tried to break up about it just in this hour. So you got to wait and see, what you're going to get by the end of the hour. Okay, if we got a close beneath here, a close on this low, then immediately I'm going into the 5-minute to look at it. You also got to watch out about the closure of the Hong Kong Stock Exchange, etc. But if that remains like that, then that's that for me. I'm going to go into the 5-minute and look for the entry. Same kind of thing if you look at the Nikkei 225. Now, this is a little bit interesting to talk about. I'm looking for shorts on the daily, but you may say, "But George, why are you looking for shorts on the daily if you've got all these tails and candles?" Well, the reason I'm doing that is see this gap here that we have the gap up. Now, most gaps get closed. There's a high probability of that gap being closed at some time before the market just goes on and on up. So I'm looking to trade into that gap, which will have to come with a break beneath this level here. And so with that in mind, this is kind of just shift a little bit. Okay, so I'm looking for a break beneath that. Once we get that, so it might come today, it might not today, might end up very low close, which is even fantastic, though it's at the moving average. That gap for me is a big magnet that I want to see if I can trade into. So on the hourly time frame, I'm looking for bear setup. If I get it, I'm going to trade it. So we have an outside candle, just on the low of Friday. We have an inside candle. If I get this candle here closing inside this candle here, then it's a breakout mode. So like we had here, convergent triangle. Breakout mode means the market is likely to break out, but most breakouts fail. So if you take that, be prepared for a reversal in terms of putting your stop in the correct place. So we don't know where it's going to end. Let's see where it ends up. If it gives us a nice candle closing on its low, definitely gotta take that on the 5-minute time frame. These lows will all be levels of support you can pursue, but ultimately you want to try and break beneath that. So I'm watching these two. Let's have a look at euro. Quickly, just the kind of thinking on the daily. Now, on the daily, we had this wedge pattern. Market tried to break beneath that, and Friday's low. So whenever I have a 3-push pattern at a level of support, so the low of the year was here, so it's a little bit low because of Friday. So I'm looking for longs on the euro. So all I'm waiting for is to see a reasonable setup on the hourly time frame. Then I will trade that. So the way it's looking now, sideways price action, I want to see a breakout above that, come back to test that, give me a decent enough higher low, then I am going to trade that. And of course, if I'm taking that kind of trade that sets up there, then the stop is here. If the market comes back, breaks beneath this, gives me a higher low from this low, then of course the stop has to be here. But I'm watching euro, looking for longs. Gold is on my shorts, looking for shorts on gold. And the reason is this. Okay, let's put it up. It's a bit cluttered on the weekly, but we can see this level of resistance. I think is very, very significant. Market has tried, got up once, tried again, micro double top, tried again, and it's failed. And so far, we just seen selling on the tail. So this huge candle, outside candle for me is just a bigger trading range. And if you got a bigger trading range, you look to sell at the top and you look to buy at the bottom. So where would you sell? I think the market may go up and test that, and there should be sellers in this level. So it's on my sell watch list. If I look at the daily, okay, I'm looking for opportunity to sell. It would have been, I'd love to see just test that and see the strength of the rejection. But if we carry on from that and come back, give me a double top, a lower high, I can trade it. But that's the level of resistance that I think might draw the market up and pull back. So I'm keeping an eye on this hour by hour and looking for shorts. So Jeff, I've got euro dollar on a buy, gold sell, Hang Seng 50, Hong Kong 50 on a sell, and Nikkei 225 on a sell, mate. That's what I got.
Mate, sounds pretty good. Ash was wanting to get that analysis on gold, but he's crashed out. So I'm sure he'll watch the replay very, very shortly when he gets his internet back, and he'll be sated. He'll be sated by that. But yeah, look, same. That's in a trading range, has been for days. And if it, to me, the level that you've got there as the high, which is where you're looking for reversal and a lower high, exactly the same as I'd be doing. Exactly the same. Yeah. Because it then goes to the top of the range, and that's my thing. Once it's hit the top, I feel it's going back towards the bottom, unless, of course, it breaks out. If it breaks out, it doesn't matter. We then look for the pullback to go long, isn't it?
Yeah, we do. Whichever way it goes, we're ready.
Yeah, exactly. That's why I love ranges, because they actually do give you a very strong signal as to what happens next, because it's either going to be a false break or it's not.
It's not.
You've just got to recognize the
patterns over and over again.
Yeah, what's telling you that it's a false breakout? What's telling you that it's a real breakout? And once you learn that language, it becomes a pretty easy task trading ranges, I believe.
Yeah, I mean, there is just a couple of forces here that's important. There's this high here, so breakout above that, but this dotted line here, I think we spoke about it last week. That's the midpoint of the year, so very, very strong level of resistance, or if you break about it, support in that wedge that's been formed. So everything is kind of pointing to look for shorts. So just have to be patient, and hopefully we'll get rewarded. A beautiful move.
Those rewards, they do come if we're patient, do they not?
That's exactly it.
All right, mate. Thank you so much.
I really appreciate it, and we'll catch up next week, same time.
But you'll catch up with people who want to watch your show on Wednesday, of course. And I'm not even going to mention the time, because we've had another daylight saving change, this time in the US, but they shouldn't affect anybody really, apart from the 4-hour candle changes.
Yeah. So it's 9:30 now. I can say 9:30 GMT stroke UK time. That's when we start for an hour on Wednesday.
Yes, it's now both the same. Absolutely. All right, mate. Those of you who can, please join George on Wednesday to learn a little bit more about what he does. And we'll catch him next week here on Trading Buddies on Monday. Thanks, mate. Have a great week.
Take care. Cheers. Bye-bye.
And everyone else, I don't think there's too much more to say, to be honest. I've got a similar opinion to George on the euro. I'm looking for longs. That's Euro CAD. Now, I did mention Euro CAD may well be the trade of the week if it sets up. Now, two thought processes here. One is that we're in a trading range and we're now at the top of it. Daily chart showing that far clearer. 4-hourly chart, if you zoom out a little bit, is also showing that fairly clearly. So what I'm looking for is exactly what we've just been talking about. Break out of the range, retest it, go long. Now, if it were to pull back here, then give us a higher low, and I'm looking for shorts, right? I'm not looking for longs. But if we go above here, come back, you've got to look to take profit at that trend line. That's the key here. Now, if it closes, again, the trade is short, not long, but it's short-term long is the thought process. And I know this gets confusing. I can't trade long here, but if it comes down to here, then I can start to trade long. But I'm not looking to trade long at the moment. Short is the way that the weekly is telling me to go. So if I get that break, come back inside, retest, short, but take profit here on the smaller time frames. If you want to trade it on the daily time frame, it's exactly the same process. But this could well go long. If it does go break that range and go long, then I'm not interested in trading short anymore. But it's got to do that. It's got to break, come back to the top of the range, then go. Maybe I'll look to trade that because that's what dollar weakness is, or suggested dollar weakness is going to prove. This is Euro CAD, sorry, not Euro dollar. So oil may be a consideration with this one, but it is at the point where we'll either have a break, retest, go long, or a false break, go short, but take profit at that trend line. That's going to be the trade of the week. I will keep you updated on that in the Telegram group. Those of you who are not in the Telegram group, you can do that for free, I think, for a month by clicking on a link below us here in the YouTube channel if you're on it. If you're not, I think you'll probably find a link somewhere in the chat. There it is. Thank you, Angel. If you're not in the Trading Buddies in the circle on Telegram group, that's the link that you press to get in there. As I say, free for a month, I think it is. All right, guys, that is the show for the day. And I look very much forward to seeing you again on Thursday when, of course, it's quiz day. And Ainsley will join us with her thoughts on gold, oil, and whatever else she's looking at as well. Thank you for your company this Monday. Have a great week ahead. And